What is going on, my beautiful people? Welcome back to another video. I'm loving that as this channel grows, you guys are getting more involved, and this idea came from one of you in the comments, and this is, how do you know when you should buy something? How do you time the markets? When is the right time to invest your money? So in about a couple of minutes, you are going to have everything you need to know, all the quick tips that are going to let you know when the best time is to invest money so that you can make a ton of money. Okay, so the first thing you absolutely need to know is when you are looking at assets that you want to invest in, whether that be in stocks or be in crypto or anything else, do you have conviction in the things you're investing in? Now, a lot of investors will have high conviction, medium conviction, and low conviction investments. And obviously, they're going to weight their portfolio with the most of their money being in the high conviction stuff. But if you think about it like this, if you think of something with high conviction, you say, I want to hold Bitcoin for a long time because in my opinion, in 10 years from now, Bitcoin is going to be worth so much money. Or maybe Tesla. You're like, I want to hold Tesla stock until I'm 80 because I think it's just going to continue going up and up and up. I think it's going to basically set a new paradigm shift. When you have these high conviction assets, really think about it. It doesn't really matter if you're perfect with your timing. Of course, it would be the best if you could buy the majority of that asset when it's at its lowest point in the last, 2 years or something like that. But if you think that it's going to continue going up year after year after year for decades, if you dollar cost average, you're still going to be up quite a few 100%. So really timing it by, 10% down or up doesn't really matter. And it takes a lot of the stress out to just dollar cost average, which is basically just buying the same amount every single month, no matter what. If it's up, you buy whatever the number is, $1,000 of it. Even if it's down, you buy $1,000 of it. So that's the first thing that makes it really simple. Now, another thing that you could use is identifying market cycles. Now, depending on the asset that you're looking at, there are different market cycles. For example, when it comes to the crypto world or Bitcoin specifically, it basically follows a 4-year cycle where every 4 years Bitcoin halves, which means that there are half as much new Bitcoin created. And each time that happens, about 2 years after the halving, we start to see a really strong bull market. That's actually where we are right now. So if you wanted to, you could kind of time it basically saying, okay, right now where we are is I think we're going to have another 6 to 9 months worth of this bull market, and then we're going to see a couple years of bear market. And then after that next halving, a couple years, and then it'll start going up again. So you could say, I want to try to time it as it's coming down. I could buy in set amounts called ladder buys. Basically, as it continues dropping, you buy 10% here, and then it hits the next price target. As it drops, you buy 10% there, and you keep trying to do it that way. You average in as it's going down. That's one thing you could do. You can also identify market cycles, in like the stock market or housing with bubbles. So if you do think that assets are way overpriced and they're due for a huge crash, you could wait for that crash. Now, in my opinion, if you're new and you're not really experienced with being able to identify this kind of stuff, it's not really worth your time or your stress. I think dollar cost averaging is probably one of the best things to do, but there is one more strategy, and this one is probably the most important. Okay, so for this one, again, identify what your time horizons are. If you're going to hold something for 10 or more years, then it makes it a lot easier to buy at any price, and you're going to be in profit. And really, it just comes down to trying to time it a little better so you make a little more profit, but either way, who cares? If you're planning on only holding for something for less than a year, then it's going to be really important that you time it correctly, because if you buy right now at a high and then in 9 months from now you need the money and it's going through a bear market or where it's crashing, it's going to be pretty painful. But if you have a high time horizon, you don't mind waiting 5 or 10 years, and a high conviction of an asset, the best thing that you can do is to buy when there's fear, when there's blood in the water. So basically, when you're seeing something crash really hard, like for example, a month, 2 months ago, we saw Tesla drop. I think it was from like $880 down to $640. A lot of people were saying, there we go, Tesla's being repriced because it has been so overvalued for so long, it's going to zero. And people who had high conviction in Tesla were buying the dip, is what it's called. We just had this with Bitcoin, where it was up at its all-time high of 64,000, and it dropped all the way down to 47,000. People were losing their mind. People were getting depressed and posting some pretty dark things. A lot of people were selling at a loss because they said, okay, this is the top, and now we just go down for the next few years. This is the start of the bear cycle. Those people who had high conviction, who were already dollar cost averaging in every month, said, oh my gosh, this is the best discount or fire sale that I'm gonna get for a really long time. And this is the exact psychology switch that you need in your brain when it comes to investing. Instead of thinking of it as, oh no, things are dropping, I'm losing money out of my net worth, my portfolio. I lost, on paper, I lost 10 grand, because I had 100 grand in something and it went down 10% in the last week. I need to sell so that I don't lose any more because that's hard-earned money. Instead of that, switch it and think, oh my gosh, I can buy more of this asset that I already love so much that I'm already gonna plan to hold for a really long time. And it's back to where it was a month ago. It's 10% cheaper, 20%, 40% cheaper. Oh my gosh, this is amazing. I can buy so much more. My dollar goes so much farther. So when you have this switch from thinking of losing money as your asset goes down to, oh, things are on sale, that is a fundamental change that will make it more, it'll not only make you make better investments and you'll get in at better prices and you won't FOMO in as things are going to a new top. You aren't gonna go, oh no, I missed it. I need to buy some right now because it's gonna keep going up, and then it corrects again and then you sell because you're scared. It's also gonna take a lot of the emotion out. So I was actually just talking to a friend of mine about crypto, and he literally, same as me, most of his net worth is in crypto, and he was saying, dude, when Bitcoin just dropped heavily, I was soaked. I've been waiting and hoping and praying for a huge crash or a huge dip so I could buy more, and he bought more. Obviously, it's a little easier said than done, but as you do it and as you get more experience doing it, it does become easier. Also, especially after the first or second time you've done it, once you've seen it work for you, then it's a lot easier to say, oh, I'm buying when it's 30% down because I've done this before and 6 months later, I was up 60 or 100%, whatever. I'm stoked. I've seen this work before. Always remember that, with time comes experience, and anytime you're losing money in the markets, it's just basically you paying the price of tuition to learn more and get more experience. So there you have it. To answer your question, when is the right time to buy an asset, or how do I time the market? Really, in my opinion, dollar cost averaging is the easiest, most stress-free way to do something. And then really sit down and identify how much conviction you have on each of the assets that you are investing to. And when your high conviction assets that you're already dollar cost averaging into each month, when they crash or dip, then just buy more. So instead of doing your normal dollar cost average purchase that month, maybe do 2 or 3 or 4 times it, because it's just an awesome fire sale at that moment. So there you have it, guys. There is my strategy. That's what I've been doing for the last couple of years. It's worked extremely well for me. Remember, none of this is financial advice. I'm just giving you, what I've experienced and what I've learned over the last few years of investing. If you guys want to check out BlockFi to earn Bitcoin on your Bitcoin, basically a Bitcoin savings account, you can check that out. It's in the link below. If you want to purchase crypto or Bitcoin, you can use my Coinbase link. It's also in the description below. And if you're interested in investing in stocks or ETFs, you can use Webull. You'll get a big bonus on all of those if you use the links in the description below. Let me know what other types of video you'd like to see on this channel. I plan on consistently updating here, growing this channel huge. I'm really excited about it. I love that you guys are here. So make sure you give a big old thumbs up. Let me know what you thought in the comments below and tell me your strategy when it comes to timing the market as well. And I will see you beautiful people in the very next video.